Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, it was definitely a very volatile day of trading. Everything kicked it off in the morning, guys, when we got the CPI report that came in a lot better than expected, which led the markets to have a heck of a rally in the morning. SPY and QQ pretty much both up over 1% at that point. And then things started cooling off at the midpoint of the day in anticipation of event number 2 for the day, the Federal Reserve meeting with Jerome Powell, commenting on the status of inflation, on the economy, and on the jobs market. Now, that event too was largely well received by the market, not giving back too much, even though Jerome Powell did host us with a little bit of a hawkish tone. So in today's video, guys, we're going to go over a few things together. Number one, of course, we're going to take a look at the CPI report that came in this morning and see why it came in a lot better than expected. Number two, we're going to go over a very brief recap of what Jerome Powell had to say in the Federal Reserve meeting this afternoon. And then after that, guys, we're going to take a look at one company earnings that came in pretty much after the close today. And it was a big one, talking about AVGO BROADCOMM. They're pretty much up 10% in the after hours plus right now, having a very good quarter indeed. Thereafter, guys, we're going to do our major technical analysis rundown in terms of our major market indexes and then our big tech names, and wrap it up with a quick glimpse into my portfolio for a few new trades made today. So a lot to cover today in the video, guys. So let's get started right away. SPY up 0.82% to close the day. Very, very nice. QQ up a very healthy 1.31%. And when we take a look at the heat map, guys, it was once again a day largely led by big tech and semiconductors. This bullishness in semiconductors will probably lead into tomorrow as well, with the performance of AVGO in the after hours, which is not reflected in these prices right now. However, there were a few segments of the market that did not fare so well today. Most of your consumer defensive sector was down, so all of your value names pretty much down. Healthcare was down as well, and most of financials were red indeed too. Energy down as well. Only really consumer cyclicals and a bit of industrials were green, but very mixed day across the bottom half of the market. Your outperformance, once again, led pretty much by big tech names. Apple having another very beautiful day, and Oracle, of course, after their earnings yesterday, up a whopping 13% on the day. So a little bit of a mixed market in terms of the bottom half. In terms of your one-day relative, guys, you can see that even better, where most of the segments of the market were indeed up, led by technology, of course, but, you know, healthcare, utilities, energy, and consumer defensives just not having the greatest day at all. So what exactly happened, guys? Before getting into more technical analysis, let's take a quick glimpse into what happened with our CPI report that led the markets to go in a really, really big upswing this morning, over 1%. So the expectation leading into CPI, guys, I'll remind you, year over year was for 3.4% and month over month was 0.1. Now we came in better than expected on all fronts, even on core. So month over month, you're looking at a 0% increase. Yes, no inflation at all, measured on a month over month basis. On a year over year basis, we are actually under the expectation, coming in at 3.3 instead of 3.4. And even your core in terms of month over month, 0.2 versus 0.3, that's very good beat. And even on your core year over year totals, 3.4 in relation to 3.5 expected. So all of your metrics for CPI coming in less hot than expected. Very, very decent. So let's take a look at the data and see what are still the sticky points. Now, inflation slows in May with consumer prices up 3.3% from a year ago. Let's take a look at the graphs now, guys. You can see this nice progress on inflation. The dark blue line is pretty much your regular CPI, and the blue dotted line is what they refer to as core. Now, core for a large part of the most recent year, guys, has been well above your headline CPI number, but now they're actually really coming in line together. You can see that right here, and that is just a very, very nice drop in overall core inflation, and even your overall headline inflation, guys, continues on the downtrend. I do agree that it's been relatively sticky here since the midpoint of last year, but at least it is not in a clear uptrend. So inflation is still moving in the right direction, but to quote Jerome Powell, it will probably be still a little bit of a bumpy road. Take a look at your US Consumer Price Index month over month. This was a crazy read, guys. No inflation month over month at all. Nobody was expecting this, guys. The expectation was for 0.1, similar to what we got in October, but to have a 0% read, you would have to go back to July of 2022 to find such a very good read. So this was really the most bullish point of the entire release. Now, here's what a few analysts had to say about this, and I do do agree with this. There was a relief at the pump, meaning after the report, but unfortunately, home and apartment costs continue to rise and remain the main cause of inflation. Until those shelter costs begin their long-awaited fall, we won't see major drops in CPI. And that's literally what we've been saying on the channel, guys, now for about the past 4 or 5 months. Nothing new there, right? We've brought up this graph every single CPI report. The red line is your overall inflation at 3.3. The green line right here is your goods. So all goods, you can see what a steep decline in goods, now pretty much under the zero line, showing that goods and most of your commodities right now are in a little bit of a deflationary cycle. Yes, decreasing prices for a lot of the goods out there. However, your shelter cost, this yellow line right here, you can see it's remained very, very sticky, well above the 5% mark still, just hasn't really been able to come down over the last 5-6 months. And pretty much, guys, 70-80% of all of these services, guys, is home and shelter, right? So those are the two main sticky points. And Jerome Powell did address this in the meeting this afternoon, saying that although they are lagging behind the rest of inflation, that inevitably the housing market and rental market should be coming down. However, most likely in the second half of 2024. So before seeing really major declines in this inflation number, guys, the goods are pulling their weight, but we need to start seeing some of those drops in the services market, more specifically, especially in relation to homes and rents, right? So now moving into one chart that I always show you guys every single inflation report, just to show you guys where inflation is and isn't, right? So in terms of this, inflation fever breaking, price hikes on everyday expenses finally easing up. And here's what they mean, guys. Yahoo always does this little table of a basket of goods, right? You can see that a lot of items, guys, are currently in deflationary territory right now. So let's take a look, right? You have a few ones that are currently above our overall headline number. Auto insurance is one of your major contributors here in the last couple of months. Rent, housing, no secret there. Restaurant meals, still a little bit elevated. Here is your household earnings. So salaries are still above the rate of inflation. That is good. That means the consumers have positive pricing power right now. So you are not losing any money to inflation for the most part in terms of your hourly earnings. Now, personal care, transportation still slightly above, but look at all of the items that are now below our headline number and even in deflationary territory. A lot of these things were very, very high last year and they've eased off quite a bit. Household energy, medical care, education, alcohol, recreation, clothing, gasoline. These are big ones. College tuition, groceries, another big one, 1.1% only on groceries, guys. And now look at your deflationary items, prices that are actually coming down year over year. Hotel rooms, electronics, new vehicles, pets and pets products, school book supplies, furniture, appliances, airfare down considerably, used vehicles down considerably since last year, guys. Toys and rental cars. So all in all, guys, a very good picture of inflation. You can see that really it's all due to the housing market. The reason that we continue to have elevated gains just because they have such a significant weight in the overall calculation of CPI. That's why as soon as these things start dropping a little bit more aggressively, that is when you're going to see most of the CPI really start coming down a little bit quicker, right? So all in all, guys, it was a fairly good report on inflation. Nothing bad to say. Most of everything is still down, but I do want to remind you guys, right? Jerome Powell also commented on this as well, and we'll take a look at what Jerome Powell had to say, right? So there was one question what that Jerome Powell said, right? And I'll bring it up right now if I can find it. So he was basically asked, why do people, even though the economy's been doing good, why does everybody not feel that the economy is doing good right now? And I'll find that in a little bit. And he had to say, well, nobody really knows why people don't feel the economy is good right now, but the data said that it is good. So sorry, guys, I can't find it. I don't want to spend too much time on this, but just a quick reminder in terms of what prices did, right? So 2022 prices did this. They absolutely exploded to the upside. And now prices have been increasing at a more streamlined and normalized rate. So just a quick reminder, guys, a lot of the reason that people aren't that confident in the economy is because of these price increases from 2022 into 2023. These price increases are gone. However, they cannot be erased, guys. Do not expect prices to magically just do this. That would be because we're in a recession and companies have to severely cut prices to stimulate demand. Why the Fed is currently pleased with the trajectory of inflation is because it's no longer doing this. Prices are no longer skyrocketing. They've now established a more progressive move to the upside, which is in relation to our pretty much everyday history, right? Prior to the pandemic, this is a more normalized curve of inflation. So although prices are a lot more elevated than they were prior to the pandemic, right? Unfortunately, guys, we're probably never going to see these prices that we had prior to the pandemic because, as I said, if you're expecting price decreases like this, that is synonymous with a recession, and that would be really bad for pretty much everybody. So that's just a little quick tidbit here on how pricing and inflation works. Now, in terms of your Fed meeting here, we did have a couple interesting elements that were raised by Jerome Powell. However, for the most part, guys, he's been saying the exact same thing that he's been saying for the last 3, 4, 5 months at this point. They're pleased with the job on inflation, but the job's not done yet. They're pleased with the status of the economy. They're pleased with the jobs market, but they do realize that heightened interest rates are starting to weigh a little bit on those two factors, the economy and the jobs market. So let's dive in right now. So a couple little things that I did want to mention. No one on the Fed committee has rate hikes in their base case. So rate hikes, guys, are pretty much off the table right now. We think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought that, since we raised rates this far, we've always been pointing to cuts at a certain point. So now, guys, in this most recent meeting, there was a lot of analyst questions. And the tone of the analyst questions, guys, we're getting a little bit impatient with the timing of the rate cuts, right? A lot of analysts were pretty much asking the same question in different words. And I'll pretty much paraphrase here. They were asking him, listen, Jerome, if inflation is now considerably down, right? And you guys have already said that you are going to cut rates before inflation hits your 2% target, why don't you just cut it right now? Are you worried that maybe you're keeping rates too high and that is going to have an adverse effect on the economy and the jobs market? And Jerome Powell basically saying, we understand those risks. We understand the risks of keeping rates too high for too long, and we don't want to really push the economy into negative territory. So they understand the risks, guys, but still, they are not yet ready to start those interest rate cuts. Now, moving on further, there's an argument talking about Powell says recent jobs data may be a little bit overstated. Here's what he had to say. There's an argument that they may be a bit overstated, but still, they're strong, Powell said. We see gradual cooling in the jobs market and gradual moving towards a better balance. And after this statement, guys, this statement triggered a very interesting question. And I wrote the question down here. When he was asked, since the labor market is a lagging indicator, which it is, if you wait to see deterioration, are you too late? Very interesting question, guys. In consideration that the labor market is a lagging indicator, it could be stated that if the Fed waits to see declining jobs data, that potentially it's already too late, right? Well, here's what Powell had to say about this. He literally said, it is not our plan to wait until things break so that we can fix them. Once again, acknowledging they understand the risks of keeping rates too high for too long, and they will be very, very, very on point on monitoring the data. And if they see any substantial weakness starting to form, you can probably expect rate cuts to be brought forward sooner than anticipated. Now, today we got a release of the infamous dot plot, which is the summary of economic projections. It basically takes all 15, 16 Fed members and what their interest rate projections are for this year and for next year. That little bit is hawkish. I don't have the summary of economic projections on screen right now because I feel, guys, that for a lot of people, it really just doesn't mean that much. All you need to know is that prior to today, Wall Street was expecting 2 interest rate cuts by the end of the year. When the Fed released their infamous dot plot this afternoon, it only showed 1 interest rate cut towards the end of the year. However, that did not change the federal funds projection by Wall Street. Wall Street still, even though the Fed came out with a statement today, Wall Street still does believe that they are bluffing and that they may just do 2 rate cuts this year, with the bulk of them to come obviously later on into 2025. So that's pretty much everything that we had to say with Jerome Powell, guys. Not much more than that, right? He did speak for a very long time, but there was just nothing new. So rather than me just reiterating the same points that we've been going over for the past 3-4 months, guys, just need to understand the current narrative at play right now, right? The economy is healthy, although it's slowing down because of high rates. That's the purpose of high rates, to cool down the economy, cool down the jobs market so that inflation starts going away on a more semi-permanent basis, right? So the economy is cooling down a little bit. The jobs market is cooling down a little bit. Inflation is still trending to the downside. overall, the picture is still one of a very healthy economy and a Fed that is managing expectations as best as they can. Are they potentially punting and not giving us the answers that we want? Yes, guys, but that is their job. If they tell everybody, you know, guys, we're perfectly happy on the progress for inflation, we're going to start cutting interest rates aggressively right now, what are consumers going to do? They're just going to go out and plow money into these markets, plow money into consumer spending, and that's going to make inflation take a nice little uptick, and that is not what the Federal Reserve wants. So even if the plan behind the scenes is for them to cut rates 2-3 times in the next 6 months, they will never tell us that, guys. They will never tell us that. They'll wait for a bit of negative data to come in, 2-3 reports in a row, and then they'll say, well, in light of the slowing economy, in light of the slowing jobs market, we don't want to trigger a recession, so here you go, here's your rate cuts. That is how I see it being played out. So hopefully that is helpful for everybody. Now, guys, let's dive right into our earnings from BROADCOMM, and they were quite good, to say the least, guys. BROADCOMM up a very healthy 15% now in the after hours. That is definitely going to move the markets here, guys, tomorrow, because BROADCOMM is a very large component of the semiconductor industry. Now, BROADCOMM having a substantially amazing earnings, beat on EPS here by about 1%, beat on revenue by about 3.5%. And all in all, guys, just a very solid report, beat on the quarter and increased guidance. And not only that, they announced a 10-for-1 stock split following pretty much in NVIDIA's footsteps, right? So very, very nice here. That will be live on the trading as of July 15th. So roughly in about a month from now. That is pretty much the most bullish, well, not bullish, but pretty much the biggest headline of the entire earnings. So very, very nice there. Once again, guys, stock split doesn't really mean anything for the company. It's just the same thing as if you had a $100 bill or you have 10 $10 bills. At the end of the day, it's still the same $100, right? So 10-for-1 stock split at these prices. This would mean that BROADCOMM would start trading in July. Divide this price by 10. So if it was current price, it would be about $150. It's going to make it a lot more manageable for people that don't have access to fractional shares on their brokers to maybe pick up the stock if they like it, but also a lot of options traders who are priced out of different option strategies at these very high prices. They will be able to now play BROADCOMM on a more affordable basis. So at least it's going to increase trading activity on the stock, in my opinion. Now, moving into further of the report here, guys, it was a very good one. The chipmaker expects about $51 billion in sales during 2024, an increase over the company's previous forecast of $50.42. That is your full year guidance, and that is a raise. Now, they did report about $2.12 billion in net income. That is GAAP net income. I'll show you the non-GAAP ones that we use pretty much for most of the analysis at this point. But all in all, very, very decent net income as well. BROADCOMM is one of the chip makers benefiting from the artificial intelligence boom because its devices can run the sorts of AI applications that have enamored the tech industry. BROADCOMM said $3.1 billion in sales during the quarter could be attributed to revenue from AI products. That is literally a third of their entire revenue. Pretty good, right? For example, BROADCOMM works with Google, which partially designs its own AI chip called a TPU. Now, the company also said revenue from VMware, an enterprise software company it acquired for $69 billion late last year, contributed to its sales growth and forecast for the rest of the year. So this VMware acquisition by BROADCOMM, guys, apparently turning out to be a very good deal for them. The company's overall revenue was up 43% on an annual basis during the quarter. Without VMware sales, it would have been up 12% on a year-over-year basis. So once again, guys, reiterating the fact that VMware acquisition really playing into their pockets right now. Excessively good. Now, where does BROADCOMM stand, guys? BROADCOMM is an excessively strong company, other than the fact that they did take on a number of debt, a significant amount of debt, guys, after the VMware acquisition, right? So they're currently running about $39 billion worth of debt, but it's really not that bad. When you consider their yearly free cash flow of about $18 billion and their cash and cash equivalents on hand, they do produce enough cash and have cash in reserves to start paying down this debt aggressively. So not that big of a deal, in my opinion. In terms of their net margins, look at this net margin explosion, guys, at this point, about 39% last year as a total. And for this quarter as well, I'll show you it's about 40% as well. Couple that with the fact, guys, that they have net EPS growth. Take a look at this beautiful EPS expansion curve, beautiful revenue expansion curve, guys. They are going to be one of the largest beneficiaries of this entire semiconductor run. And so far already, they have been, obviously, right? So moving on to a few of their details here in the quarterly report. So Free cash flow, a very big one. Free cash flow, excluding restructuring, was up $5.3 billion, up 18% year over year. That is fantastic here, guys, right? On a quarter over quarter basis, in terms of free cash flow for Broadcom, you can see here, right? Last quarter was about 4.69, prior quarters in the high fours in terms of free cash flow. Well, guys, now excessively good, right? 5.3 billion, one of the record quarters. I'm sorry, the debt as of the most recent VMware acquisition, guys, the debt is actually closer to 76 billion. My apologies, forgot to put it on the quarterly, but still not that bad in my opinion, guys. It is really paying them dividends right now. The acquisition is doing substantially well for their top line revenue and even for their margin expansion. So now moving on to a few of the numbers here, guys. Well, the numbers you can see, I just wanted to highlight a couple things, guys. Not going to spend too much time on this. So in terms of their net income on the non-GAAP basis, right, you can see here that they do run 43% non-GAAP net income, which is very good. These numbers reported right here are all non-GAAP. So we'll just continue with those just to kind of follow the trend right here. That has pretty much been one of their best quarters on record. You can see here, guys, usually about 42, 39%. Well, this one really coming in over and above that, 43% net margins, excessively good, right? Company's cash and cash equivalents at the end of the quarter, $9.8 billion. So they used a little bit of money here, guys, just to continuously buy back shares. Very good. And that is pretty much everything for that. I just want to take you guys through one more thing. If I do remember that I highlighted something right here. Did I highlight it? Oh yeah, I just wanted to go through the operating leverage of the company. So our revenues growing faster than the cost of those revenues, right? You obviously want to be expanding revenues faster than your expenses, right? And continue generating more and more net income. Well, as a matter of fact, it's not too bad. Net revenue up 42% from the same period of time in 2023, and the cost of that revenue up 44%. So eating slightly into the net revenue gains, but not too much, guys. Still relatively very healthy company. Nothing bad to say about this business at all, right? It's written right here. High free cash flow, high net margins, good buybacks, not too bad in terms of management compensation with shares, medium debt, right, in relation to that VMware acquisition. They're starting to pay it down. In terms of valuation now, guys, the valuation at $1,700. Well, we did it right now, right? So EPS growth, healthy double digits. Revenue growth, healthy double digits. EPS growth, very healthy double digits, 17.5%. So if we take in consideration their 2024 year-end PE ratio at $1,700, it gives us a 35.8. Little bit high, but when we take that EPS, when we take this PE ratio in relation to their growth, divide the PE by their EPS growth through 2027, we get a PEG ratio of 2.4. I'll remind you, anything under 1 is very good, between 1 and 2 is okay, and anything above 2 starts to be a little bit high. However, this trades in an industry where most PEG ratios for semiconductors, guys, are almost all above 2 right now. So to be closer to the 2 is not that bad, even though we are trading at the all-time highs here, guys. Now, would I buy this company here? Probably not, right? It's going to be very tough for me to start a position up here. But if you're holding a position from probably months or years prior, I really don't see any red flags to sell just yet. The company is firing on all cylinders. But for all of us maybe waiting for a little bit of a trade opportunity, maybe going to have to wait for these earnings to cool off a little bit with the rest of the sector as a whole, guys. If we start to see some larger consolidation in semiconductors, maybe 1-2 weeks of extended consolidation, that could be the time where AVGO really starts consolidating back into maybe the $1,600, high $1,500. That may be an entry opportunity, but to say that they're going to come back and retest these prior all-time highs, guys, from 1,700, that would be a heck of a drop, guys, 15-16%. AVGO is not really known for their volatile drops like that, right? Even when we have larger drops like this, you can see 13% right there. And this is when usually market conditions are not very clear, right? Uncertain macro conditions, in other words. So if that happens again, we may be able to retest these previous all-time highs, but I'm not really going to count on it, guys. Building up too much of a lead right now in relation to that area right there. So hopefully that's insightful for your Broadcom earnings right now. Now, guys, let's jump right into our technical analysis of our major indexes, right? So we're going to do these quickly because not much has changed. And just before we do, give me a quick second. And let's get into it. So SPY up a very healthy day, of course, but we got to be careful here, guys. These gap up opens into pretty much euphoria, into daily overbought conditions, into 4-hour overbought conditions, and prior into extremely 1-hour overbought conditions, right? Very risky proposition to be initiating longs for uptrend continuation from right here. What potentially might happen tomorrow, guys, If we open very green once again, because we have such bullish earnings from BROADCOMM, right? If we get a tech continuation into tomorrow, that will probably push us in to daily overbought conditions for good, and maybe even extended 4-hour overbought conditions. And that would be a little bit of an event to maybe take some profits off the table and wait for a little bit of a market reset. Daily uptrend is underway. If we do continue pushing into tomorrow, guys, inevitably, when we do pull back, we'll be looking for that daily higher low, anything above 532.33. Just going to be looking for that daily higher low for trend continuation. No red flags right now, other than the fact that we're kind of getting a little bit overbought, and this move does seem a little bit extended right now, especially on the shorter time frames. So just be on the watch out for the eventual pullback. But when we do pull back, guys, so much support, right? Prior all-time highs are going to be our first level of support right there, and the daily 12 EMA is curling up right into the price action right now. So all in all, looking very good. On the weekly, guys, if we close the weekly like this or similar to this, it'll just be a continued weekly uptrend breakout pattern, looking extremely healthy. Not that overbought on the weekly just yet in the grand scheme of how overbought we can be and for how long we could potentially be in there. But short term, guys, maybe looking for a little bit of a pullback soon, just off the back of extreme greed today, right? Now, moving into QQQs. QQQs, pretty much same analysis. So daily uptrend is underway. A little bit of overbought conditions on the daily, a little bit of overbought conditions on the 4-hour, and even on the 1 hour, guys. 1 hour on the Qs is pretty much blasted through the tops right now, right? In the 80s. And usually when we are in the 80s, guys, we can have a little bit of a pullback, right? Now, it doesn't mean that the pullback has to be severe. As you can see, there's a few instances where even if we just go sideways to slightly down, it does wonders to cooling off this 1 hour RSI in a big fashion. It did the same thing right here, where we had really elevated levels at an 80. However, we went pretty much sideways for just a couple days, and that did wonders in bringing down our RSI. So I'm not expecting a massive drop, just maybe a little bit of downside consolidation. That being said, anything pretty much above 461.63, just going to be eventually looking for that daily higher low for the further trend continuation. All in all, looking very good. First line of defense, pretty much your previous resistance right here, 464, which will line up with the 12 EMA that's curling up into the price action right now. On the weekly, guys, looking extremely, extremely bullish. Gorgeous weekly trend breakout, no red flags whatsoever. Oops, now moving into financials. Financials down about 0.1%. Financials really struggling in this area right now, guys. And I would have expected financials to have a much better day than this, especially considering yields had a huge drop today, about 1.5% on the 20-year, 1.5% on the 10-year. I was expecting financials to kind of run with this, but they really didn't. And that's kind of due to the fact that Visa and MasterCard, your credit card issuers, did not have a very good day at all. As a matter of fact, MasterCard and Visa have been largely consolidating here pretty much since the end of March. So we really need their support, guys, because they do represent fairly large weights within the entire financials index. So going to be waiting for those turnarounds specifically. In terms of your broader index, however, XLF, right? Well, unfortunately right now, guys, we are still stuck in this daily downtrend, right? Low, higher low, lower high, lower low. Still in daily downtrend right now, but we haven't really lost the double bottom of support, which is currently sitting at about 40.64. This is a crucial level for the bulls right now, guys, because it also represents your weekly higher lows. If we were to lose this level into the weekly close, it would be weekly confirmed downtrend, and then we would just be in for a little bit more monthly consolidation. So crucial area for the bulls to defend right now. The best case scenario is if we mount a little bit of a rally into tomorrow, guys, and start engulfing more and more of this move and reset into a daily uptrend, then the bulls can say, okay, our weekly higher lows are set. We have a double bottom, and now we're looking for weekly trend expansion. But as of now, guys, it's looking very dicey for the bulls. They have to play defense down there. If not, guys, as I said, it's going to be weekly downtrend, and we'll be looking to our ultimate lows down here at about 40.2, which is your monthly higher lows to be acting as the last line of defense, guys. The last thing you want to see is a monthly downtrend on one of your major market indexes. So moving on to healthcare right now. Healthcare looking better than most right now. So still a huge move up by healthcare, looking eventually for the daily higher low, anything above 140.65, daily higher low for the inevitable daily trend change right now. Where could we pull down into in terms of max drawdown? Maybe in this area right here, right? The 12 EMA, our prior horizontal support from all the way back here. That's going to be support again. And the 26 EMA is in there as well. So if we do consolidate a little bit further here, could just be looking for a daily higher low and maybe even a weekly higher low to really get this weekly uptrend in motion. It is now currently in motion, but not getting much legs, right? We need to see the further expansion beyond the 147 mark to really start creating some room off of these lows and above these highs and really start making a move towards the all-time highs again. All in all, guys, healthcare looking like one of the more bullish sectors, if I do say so myself. But nothing compared to this one right here, right? Semiconductors, once again, guys, fantastic day by semiconductors. Just continue to push north. Still a little bit daily overbought right now in terms of our 4-hour trade, a little bit overbought as well, but you guys know this one, it can stay overbought for quite some time. So keep an eye, guys. The 4-hour EMA, the 12 EMA, excuse me, on the 4-hour is going to be our short-term guide. In terms of our daily uptrend, right? Anything above 250.5, just going to be looking for a daily higher low for further trend continuation, looking very, very good on semiconductors. And I wouldn't be surprised, guys, especially after Broadcomm's earnings, this is probably going to open a whole lot higher tomorrow, but be very careful. If we get 2 gap up opens in a row, guys, it could be met with a little bit of take profit, which could be bringing us down to maybe set that higher low later on in the week. All in all, though, guys, weekly chart is looking excessively bullish, now putting in a bunch of space between us and the all-time highs, guys. To retest those all-time highs, you'd be talking about an 11% drop, and I really wouldn't see that happen unless the entire sector has a massive rotation to the downside, right? Only then will you start seeing that, and it all starts with NVIDIA. If NVIDIA does not start weekly consolidation, guys, this chart will not start weekly consolidation either. Now, moving on to the Russell. The Russell actually had a tremendous day on the morning, guys. It was up pretty much 3.2%, and unfortunately, they gave pretty much half of it back, and most of that was done pretty much during the FOMC meeting with Jerome Powell. Just the fact that he pushed rate cuts back once again. Obviously, the Russell is not going to respond well to that because it just means that the risk on trade gets delayed further and further. The basis of the risk on trade, guys, is that we need the Federal Reserve to start cutting interest rates. That really signals to the market, okay, it might be time to be placing some big trades on the risk on sector, which is usually the sector that runs last in an economic upswing. And so now, guys, still kind of trapped on the Russell, even though we had a nice day today, looking like it wants to consolidate a little bit further. So daily downtrend was underway. Big engulfing move by the bulls, actually breaking the previous lower high right there. So fully engulfing move by the bulls. They've created enough space at this point that any move lowered now going to be looking for a higher low above 198.36, looking for the higher low for that daily trend change back to the bulls, looking to put an end to this weekly consolidation of the past 4 or 5 weeks and start this weekly uptrend anew and really start attacking this 212 level. If we do continue down into this range right here, guys, I'm going to be looking for a trade on the Russell, right? Trying to set up for the daily trend change. If we start revisiting perhaps 202, 200, I may be tempted to make a little bit of a swing trade attempt for that daily trend change, targeting the 212 highs. Now, moving into the Dow Jones. Dow Jones not having the best day today either. They were actually up significantly on the morning and then pretty much gave it all back the entire day. So refusing to break out right now. We had the breakout underway. They were going for the daily trend change and now getting delayed once again. As of now, still just a double top. So as of currently, guys, this is where we really need to watch out. If we break yesterday's low, 38,470, it would be a technical daily downtrend, and then we would just be looking maybe for the weekly higher lows to be set and looking for the weeklies to maybe find ultimate last support at the $38,000 level. You obviously would not want to lose 38,000 because then you would be in a weekly downtrend and you'd be looking to your monthly higher lows at that point to be acting as the last line of defense, because if you would lose those, guys, would be looking like a little bit more monthly consolidation down into your prior all-time highs, and that's just going to delay the rally on the Dow Jones a lot more. As of now, though, guys, we're not there yet. We're still above our last line of defense right here, which is pretty much 38.5 down to about 38.3. Still a little bit of cushion between us and those lows, but the bulls definitely need to get their butts in gear, get this into a daily uptrend, and start creating more and more space between us and these weekly lows down here. All in all, not looking too bad, but the bulls still with a lot of work to do. All right, now moving into our big tech names here, guys. So Apple continuing to the upside. Give me a quick second. And let's get into it. So Apple having a very nice day, 2.86% to the upside. They did give back a lot of the move here, guys, today, though, right? Apple was pretty much up at one point, another 6% on the day, closing on pretty much under 3, but still a very respectable day for Apple, right? Can't ask them too much. At this point, daily overbought conditions were pretty much sitting at a 79. So let me just put a little bit of a line right here at 79. You can see how many times in terms of daily overbought we've got on Apple when it hits 79.80. Once over here, and that was met with a little bit of a quick sell-off. Then we can go back even right back here, right? In August 2022, we got there, was met with a rapid sell-off, but this was when all assets were getting crushed. So if we go into a little bit of a bull market run like 2021, even then, right, you can zoom into all these points. That's why I like going for historical data for overbought levels on companies that don't get there too often. Once again, overbought level into all-time highs, met with a little bit of a decline. Overbought pretty much in the new all-time highs right there, met with a little bit of a decline, right? But is the decline very, very steep? Usually no. It's just a little bit of a temporary decline, right? Before maybe sideways action and another push up. It happens pretty much every single time on Apple. So that being said, this time may not be different. We may just be looking for a little bit of consolidation because this, even for Apple, guys, is an extremely large move. The hourly was pretty much very, very overbought before the end of the day sell-off. And even the 4 hour, guys, 4 hours is extremely overbought on Apple right now. So although the bulls are in full control, even of the 1 hour, if ever we do set potentially a lower high into lower low, hourly downtrend, that means your daily consolidation is underway. We'll be looking anything above 192.85, just looking for a daily higher low for further trend continuation. Apple right now is in full price discovery mode. It's really tough for me to trade this one at all. We're very far from our most recent level of support, and on the way up, we really haven't set much support at all, except for this tiny little level yesterday around 207. So for now on Apple, if I'm holding positions, I don't see any reason to sell. The company is performing very, very well, but it's also very difficult for me to open new positions all the way up here, guys. I will be looking for a little bit of consolidation, guys. I want to see some consolidation set. Give me a new support area that I can base some trades off of, and then I'll be looking to make a little bit of a trade over there or wherever we kind of find that support. So that's pretty much the analysis for Apple on weekly, guys. The weekly, I mean, look at this weekly move, guys. Absolutely phenomenal weekly move. Getting not even that much overbought, not as overbought as we definitely were back here, right? So whenever Apple decides to set up for the daily downtrend, that is when you'll know weekly consolidation is going to be underway. But so far, no signs of that at all. Now, moving on to AMD. AMD still stuck, guys, 0.81% to the upside, but still stuck in this big range of consolidation. The analysis stays the exact same. Daily downtrend right now. What do the bulls need to do? Need to get a bounce, a high enough bounce in relation to 169.53. that we can pretty much guarantee a daily trend change attempt. So far, the bounce is not here yet. I would like to see us get at least above our moving averages at around 164 to make that potential daily trend change attempt. But as of now, no signs from that from the bulls. Daily downtrend. So if we go with this, guys, if we do end up with a lower high into the moving averages and maybe lower low, we have to look to our lower bounds of a range bound support right now. That will be pretty much your 153, 151 level at best. And that is pretty much also almost coinciding with the 200-day moving average. So good opportunity to be writing some short puts down here in the lower 150 range. That is what I'm doing specifically on AMD for this entire time, right? Now, what is AMD trying to do on the larger time frames? We are still, guys, trying to set the weekly higher low, anything pretty much above 149.40, looking to set that weekly higher low and get the weekly trend expansion. AMD, guys, if AMD doesn't run tomorrow with AVGO up pretty much 15%, I will be incredibly surprised, right? But if it doesn't, right, that's just better for us. Anybody writing short puts, we get even more time to farm juicy AMD premium down here. But not gonna lie, guys, this one is looking like pretty much it's coiling up, right? It's coiling up, and the break, in my opinion, is going to be very violent one direction or the other. And I do have a fairly long bias on AMD just because of the rest of the sector's performance right now, right? So could be a juicy little swing trade opportunity if you do want to take the risk here, guys, for the potential break to the upside, but we have to keep very tight stops. I would pretty much put a stop under 155 because that would pretty much invalidate the thesis of this trade, holding our prior range of support back here, right? For the eventual tightening up of this range and the breakout. If we come all the way down here into 155, that trade is kind of unfortunately invalidated at that point. Need for it to wait for it to set new lows and then make the daily trend change attempt. Then your entry goes here, stop goes below there, and that's when you try to hold it to here and then higher at the 180s, right? So hopefully that's helpful for some swing trade analysis on AMD right now. In terms of Amazon not having the worst day at all, right? Down about 0.18%, but in the grand scheme of things, guys, still really pushing new highs every single day, even if it did close red. So Amazon still on this one daily move higher. We were in a big daily downtrend back here, engulfing move to the upside. Now, when bulls get a bit tired, we're going to be looking for them to set the daily higher low and continue this daily trend to the upside. Few little fallback areas here, guys. 183 down to about 180, the confluence of all of your moving averages. And that 180 level, guys, has been extremely solid. It's pretty much this red line right here, right? 180 down to about 178. Huge level of support for the bulls right now. So I don't really expect the bears to come all the way back down to this level. Just expecting maybe a little bit of a daily higher low set down here, 182. Then I'm probably going to be writing some short puts on Amazon, maybe in the 180 level, looking for the trend continuation here, guys. Why? Just because your weekly trend looks absolutely gorgeous. Very nice consolidation at the top end of the range. As a matter of fact, Amazon's been here for a while and we're above our previous range of consolidation of the all-time highs. So just a question of time, in my opinion, before Amazon really starts breaking up towards new all-time highs, guys, and smashing that $200 psychological number that so far has been a little bit elusive for the company despite pushing higher levels today. Now, moving on to Google. Google also looking good, 0.77% to the upside. What a monster is Google, right? Another new all-time high today. Daily uptrend well underway. So as soon as we get a little bit of a pullback here, guys, anything above 174.26, just looking for that daily higher low for the further trend continuation. Now to the downside, if Google ever loses these levels, sets a little bit of a daily downtrend, is that big of a deal? Not really, guys. Still in a very gorgeous weekly uptrend, right? Nice weekly uptrend. Weekly higher lows are right here, 171.28. So still a decent amount of space before losing the entire weekly uptrend. As of now, no red flags whatsoever. But my preferred trade level opportunity on Google is if ever we do come down, maybe into the lower 168, 170 level, start retesting the zone right here, I will be looking for some short put opportunities. 166, 165 seems to be like a very juicy location. But as of now, guys, the bulls are in full control. So me waiting for an order down here, it may just not happen. Google may just continue grinding the levels higher. That's why we say the bulls are in full control. Monthly control, weekly control, and daily control as well. So looking very, very good for them. Now, moving on to Meta. Meta also grinding higher today, 0.27%. And this breakout by Meta is just fantastic right now, guys. Didn't give us the re-entry that we were looking for here for this little bit of a swing trade, but looking extremely good for anybody who's long-term invested in the stock, right? Now, daily uptrend underway. As soon as this move does top out, and keep in mind when the move does top out, guys, I'll be using the 4-hour as your guide since that is what the bulls have been respecting so far. So the 4-hour 12 EMA could be acting as a nice line. If ever we lose that, set up for the 4-hour downtrend, could be in for that daily consolidation. Anything above 455, pretty much just looking for a daily higher low for the eventual daily trend continuation right now. A little bit of a fallback zone, guys. I would argue maybe 495 down to about your moving averages maybe. I don't think, guys, that we get back down to 482 unless the broader market has really like a week's worth of pullback, because now at this point, guys, we're about 6% away from that. And without Meta having really bad news specifically, you know, it's going to be tough to find a 6% drop on Meta. So that being said, if we do come down 490, that could be a nice little strike zone for a little bit of a swing trade right there. Just looking for the daily higher low and the trend continuation. On the weekly, guys, weekly trend breakout fully confirmed right now. So in the event, guys, that we get a little bit of a daily downtrend off of some market weakness, we're just going to be looking for the weekly higher low, anything above 455, weekly higher low trend continuation. That is when I'd be looking for the 482 level that we just broke out of, right? Because it'd be confluence with the 12 EMA. So as of now, no major red flags, but if the overall markets decide to start correcting for a week or two, maybe that's when we see a more extended sell-off on Meta, and that's maybe when you see the attempt at a weekly higher low, which could open up this swing trade location down here. Now moving on to Microsoft. Microsoft blasting through new all-time highs on Microsoft. Congratulations to all the bulls out there, looking excessively good, right? So daily downtrend, fully engulfing move at this point. As soon as this move is topped out, look for daily consolidation, right? Daily consolidation, anything above 404.74, looking for a daily higher low for the continuation of the trend. Now, quick little fallback area, very, very easy location, guys. The previous all-time highs, right? A couple touches back here, 2 touches back here as well. That could be a necessary fallback location for the bulls. Now, keep in mind, guys, how do you know that the daily move like this is topped out? Just keep an eye, guys, on your short-term time frames. 1 hour is very, very overbought. If they were to lose the hourly into tomorrow, then you know daily consolidation is underway. And this is the breakout and maybe retest trade that we've been looking for on Microsoft, right? There was one down here, but it never gave it to us. So maybe this larger form. Retest of the all-time highs could be on the table for a little bit of a swing trade. If we take the swing trade right here, our stops pretty much go right down below here, tight stops, right? 422, because we're just looking for the trend continuation, and any move lower than this, guys, invalidates that trade as a whole. So that's why I would keep the stops relatively tight. We'd be risking maybe $10 worth of risk, and the target I'd be looking for, guys, is probably 450 psychological. So about $20 worth of upside, $10 worth of risk could be good for a little bit of a swing trade. That's just how I would personally be looking to play Microsoft. But all in all, looking extremely good. Weekly trend breakout as well, looking very, very gorgeous, guys. The bulls are in full control of all of these time frames. Moving on to Netflix right now. Netflix still consolidating sideways, still in this very tight range. So the analysis does not change. Looking for the daily trend breakout. That's a break of 457.33. That would be for the daily trend breakout. And that would really confirm that your weekly higher lows are set and looking to continue this gorgeous weekly uptrend. On the flip side, however, if ever the bulls roll over and set a little bit of a downtrend in Netflix, well, no problem at all, guys. Still just looking for the weekly higher lows for that further weekly trend continuation. This is a weekly bull flag. We are above the prior range of consolidation of 52-week highs, really consolidating above it right now. The 12 EMA is right here, so even a little bit more pullback, guys, would still look like a very juicy bull flag. Anything above 543, so much space, looking for the weekly higher low for weekly trend continuation, and that trend continuation could take us all the way into the all-time highs. Looking very solid on Netflix, guys. Nothing bad to say, just very healthy sideways consolidation. Now moving on to NVIDIA. NVIDIA up another 3.5%. Seems as though this stock pretty much moves higher every single week, and that's because it does, right? The past pretty much 6, 7, 8 weeks in a row, nothing but upside. Pretty much kind of like Apple as well, right? Very, very solid stocks recently. Now, daily uptrend is clear as day right now. New higher high right now. Daily uptrend continues. So now, anytime this stock moves lower, looking for a higher low, anything above 117, looking for that daily higher low for the further trend continuation. Very, very easy level to be basing yourself off of, right? Prior, well, it's kind of like a little box range right now, right? Not quite testing both of them. So pretty much between 117, 115, right? That is where your previous range of support is going to be for your current bulls. That's also where your 12 EMA is as well. A little bit of a fallback zone before maybe rising higher. That is if the bulls don't just run with this tomorrow, which they probably will off the back of AVGO. And if they just continue running, guys, eventually going to need the higher low for the further trend continuation. Still no signs of the bulls slowing down on the weekly. For the weekly to cool down, guys, you need to see a daily downtrend formation. Only then will you know that we're in for a little bit of weekly consolidation. And similar to prior areas of weekly consolidation, guys, it's always been a very juicy opportunity to buy this stock. And I don't think that that will change anytime soon. Now, moving on to Tesla. Tesla looking fairly decent today, guys. A nice recovery by Tesla, 4% to the upside. Really getting helped a lot, guys, by pretty much the lower than expected inflation numbers and the drop in yield. Since Tesla is such a cyclical stock in terms of its exposure to interest rates and whatnot, any positive news for inflation and interest rates should help them a lot, which it did today. That being said, guys, we are still stuck in this range bound consolidation, pretty much between 181 and roughly 173. No break yet, but tomorrow we do have the shareholder vote on Elon's $56 billion compensation package, so we should probably get some closure on that tomorrow. That being said, this vote will probably be the catalyst to break this direction one way or the other. If we break to the downside, 167.79, daily downtrend, guys, will simply continue at that point, and we'll be looking to our lower areas of the 160 to be acting as our last line of defense. Obviously, a break and close above 182 will be a new daily leg higher. At that point, the bulls will maybe have to fall back on this location, use it as support, and then maybe try and attack the 200 level. That would be a nice trade opportunity, which is why I highlighted it. If Tesla does this and then retest the 180, maybe a little bit of a swing trade here, we're targeting pretty much the $200 level. That would be $20 worth of risk. And if we're going at 180, the stops have to go really close down below here, maybe 172, 171. Once again, we're risking maybe $10 to make $20 worth of upside. So definitely a good risk to reward trade, in my opinion, on Tesla. So we're just going to have to see where this one lands after the vote tomorrow. That should give us a lot more clearer direction on these short-term daily trends. Now moving on to Palantir. Palantir down about 0.34%, but you really can't tell, right? Because it did make new highs today. So very, very nice daily uptrend underway right now, guys. Any further consolidation, just going to be looking for a higher low Anything above 2270, looking for that daily higher low for the eventual trend continuation. Trend continuation, guys, probably going to bring us down, or up rather, into the 2540, which is your next big area of resistance. You can see, guys, it's tapped it 1, 2, 3, 4, 5 times pretty much. So I do expect that level to be a big reactionary one for the bulls. Now, in terms of lower, guys, where can we potentially look at these markets if they potentially move lower? Well, now Palantir has created a lot of space on the weekly. So if ever we lose this daily uptrend and we get plunged into a daily downtrend, just know there's a lot of support below us. First, we start 23 down to 2250, this whole area of congestion right here. And if we lose that, guys, not only are the moving averages right there, if we lose that, going to be looking for a higher low, anything above 20.63 to be acting as a weekly higher low for the weekly trend continuation at this point. The lower levels, you guys know me, I've been saying it for a while, 2150, $20 puts. If we come close to there again, I'll be riding these short puts all day on Palantir. All in all, though, looking very good, guys. Daily trend breakout, weekly trend breakout as well. No red flag on the stock just yet. Now, moving on to PayPal. PayPal down about 2% today. That's pretty much based off some news that MasterCard was increasing its integration with the Apple ecosystem, right? So, credit card issuers and Apple and Google Pay have really been challenging PayPal's market share right now in terms of their competitive advantage, right? So once again, PayPal coming down about 2% on the day as of a whole, right? Daily uptrend. Now the bears have taken back too much of the move, guys. This is not what I want to see on PayPal, right? You're talking about 100% retracement of the move. Usually when you have 100% retracement, guys, you are probably not going to get an entire V shape. At best, you can get a tightening range and then maybe a break to the upside. PayPal has done that so many times in the past. Breakout, tightening range, breakout, tightening range, breakout, tightening range. Now it's a little bit different. Now, the last time we had a big engulfing move down, you saw what happened, right? Big move up right here. And then how much did the bears take back? 80%. And look what happened to the stock thereafter. Nothing but a tightening range for a couple weeks. This time could be largely similar, and that's the best case scenario. The worst case scenario, guys, is lower high into lower low, daily downtrend into further weekly consolidation, unfortunately, and which will be bringing us once again into our lower bound range of support, which is going to be 62 down to about $60. I've said it once, I'll say it again, guys. If we come down into there, I'll be looking to maybe make some short put plays, $59, $58. It just does not appear as PayPal is ready for that breakout just yet, despite all the good things that the company is doing for shareholders this year, such as focusing on growth and focusing on cost control and improving their net margins. That's pretty much everything I had for you guys in terms of our stock analysis today. Now let's take a very brief look into my portfolio for a few trade updates. All right, guys, so taking a look at the portfolio, just wanted to give you a very brief update just because I did say I was throwing on a short hedge yesterday, and I wanted to show you guys just how I managed the position and opened a few new positions in the process. Now, none of the rest of the positions have changed. The only new updates today are always the one with the little blue dots next to them. So number one, we closed our put credit spread on Intuit. If you remember a few weeks back, I wrote this credit spread for approximately $6.30, so $630. I was waiting for Intuit to have a little bit of a pop, and the pop happened today, guys. Had a very nice pop, almost up 6% at one point, and when we were pretty much trading around the 597, 598 mark, I was able to exit this trade for a very juicy profit here, guys. Here is the closing transaction. I'm sorry that it doesn't put it in one trade, but you can see pretty much here that we got filled for 0.83 minus 2.58, we got filled for $1.75. So pretty much if you take in consideration, right, we wrote these for $6.30 minus $1.75, we were able to pocket $455 by holding this put credit spread over just the past week and a half. So I'm very happy with the way this one played out. We still had a lot of time on this one, right? Still about 2 weeks out, but you guys know with spreads, right? You have to be, either you hold them to max, to expiry to have really the maximum profit, but intermediate, like if you're halfway through the contract already and you can find 60% profit, that is very, very, very good, guys. You have to pretty much take those profits every single time because credit spreads are not like short puts. It does take up until expiry to get your maximum profits. Usually up until expiry, you're very lucky. Your maximum profit you can usually always get is about 60-70%, and that's exactly what I got today. So very happy with the way that trade played out. Now, we did have some closing transactions as well. well, we closed the SQQQ shares that we bought yesterday, and we closed the SQQQ calls. It was a very small position that I hinted at yesterday in the yesterday's video, right? You can see we bought 300 shares right here for about $9.07, and here are the calls. We bought these for about 15 cents. Well, obviously, guys, we closed those both at a loss today, right? So we closed the SQQQ position for about, $8.65. That was pretty much the entirety of the position. So not a very big loss as a whole, right? Pretty much 907 minus your 865 times your 300 shares, about $126 loss. Not that much, guys. Was just a hedge, and a very small hedge at that. And then as well on the calls, well, you can see the calls, we bought them pretty much for 15 cents yesterday, and we were able to close those for about 6 cents today. So on a 10 calls, that's about $90. So total loss on the day for all the hedge positions is about $216, guys. Not that bad at all, considering the fact that I'm running over $100,000 in long exposure. I only hedged it with $3,000 of short exposure, guys. Really liked, because as I was saying in yesterday's video, I had a pretty good hunch that today would be a bullish day, and that's exactly what I got. So didn't want to risk too much, guys, in the case I was wrong. So I do think that was a very well-managed position. I didn't want to hold it, guys. I held it into the afternoon, waiting for Jerome Powell. But when I saw the initial reaction to Jerome Powell not moving the markets too much at this candle right here at about the 2 o'clock session, I figured, you know what? Let me just close this trade, because in the event that after hours, guys, we have BROADCOMM and they blow it out of the water, tomorrow is probably going to open green again. And then if we do have very overbought conditions, I may be leaning into a little bit of a short tomorrow, but I may just use NASDAQ futures for that. We'll see about that, but I'm kind of leaning a little bit, just a little bit short-term bearish into the next few days of trading, just looking to pretty much sell into these little bit of overbought conditions, especially on your shorter time frames, right? So I may just be looking to make a little bit of a scalp, maybe a couple hundred points on the NASDAQ futures down here, right? If we can really pretty much come up 19,800 tomorrow, may just be looking to short it for maybe, 200-300 points to the downside, nothing too big. But all in all, guys, fairly decent day. And then the only other position that we touched today as a whole, guys, was Visa. Visa, we actually opened another, well, let me just put it up here, because for some reason, Interactive Brokers doesn't put them together, even though it does on the phone application. So what we did today is on Visa. We have a new trade on Visa, and we did the exact same thing as on Intuit. It is another put credit spread. We wrote for the July 12's 270, so we sold the 270 puts and we bought the 265 puts, and the total net credit between the two is about, let's call it $1.56. So we got a pretty good fill on that, right? I'm always telling you guys that respect the rule of 1/3. You always want the total premium collected on a credit spread to be 1/3, roughly 1/3 of the width of the strikes. So the width of the strikes is about $500, right? Now, the difference between what I got in credit right here, $356 minus $2, right, is about $156. If we were to divide $500, if we divide 156 by $500, the width of the strike, you can see we're getting roughly 1/3 in terms of premium exposure in relation to the width of the strikes. So I like this one, guys, on Visa. As I've been saying, I've been looking for this one for a while. Seems as though we're trying to find a bottom in this area. 270 down to about 267. Couple that with the fact that we do have the 200-day moving averages right down here at about 264, and we've been pretty much consolidating sideways now, very tight range since the later part of March. MasterCard as well, just consolidation, guys, after such a healthy rally, overbought conditions, just very healthy consolidation, monthly consolidation down as well on MasterCard into the 12 EMA, and Visa pretty much showing the exact same characteristics, just a little bit of monthly consolidation down into the 12 EMA. So I gave myself a lot of time on this, pretty much gave myself a month, just in the event that Visa continues consolidation a little bit, right? At least I won't, at least I won't be caught in the next couple of weeks in this position. I'm giving it a full month. So looking very good on Visa, but I would not be opposed if Visa does, for some much reason, guys, come down into the 263, 260 area. Well, then I'll be doing another put credit spread, probably 260, 255s, 1 month further out, maybe, mid-July, maybe early August at that point. But I like this trade. I like Visa. I like MasterCard. Whenever I get the opportunity to be writing put credit spreads on these or naked puts as a whole, that's what I choose to do. But for now, writing the put credit spread as a whole here, guys, just do it's a very good use of small capital and you still get a fairly decent reward. I went in pretty much towards the, around 271 on Visa on this. I was kind of on the fence about doing 1 or 2 contracts, but I figured, you know what, if I'm to add to this position, I may as well wait for another maybe 1 day of red. If we do pull down here, 268, 267, maybe I can even write one of these at a lower strike, maybe the 265, 260s, right? So that's the only reason that I'm looking to kind of hold out, maybe gonna write 1 or 2 additional contracts on these. But other than that, guys, that's pretty much the positions of the day. Nothing else changed. I'll be giving you guys another update tomorrow or Friday if I do anything else. So that's pretty much everything I had for you guys today. Hopefully you enjoyed it. If you did, consider dropping a like on the video. Really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new here, guys. We do these daily market recaps every Monday to Friday, and I would love to have you here with me for that process. And lastly, if you have any questions at all, guys, a stock that you want me to go over, keep in mind, I go over tickers for subscribers every single Saturday. So if you want me to look at one of your stocks, leave it down below in the comments and I'll get to it on Saturday. If you want me to look at an options play you're considering, macro discussion, anything you guys want, leave it down below in the comments and I'll get back to you usually within the first 24 hours. So take care, guys. Happy trading for tomorrow. Best of luck to everybody. I'll see you tomorrow after the close, and peace.